All right, future MLO masters, welcome to your training arc. Today, we're diving into one of the biggest, most important parts of the national exam, ethics and fraud. And listen, this isn't just about cramming rules. Nope, it's about building the mindset of a real hero in the mortgage industry. So, you want to conquer the MLO exam? Think of it like the final boss in a video game. To win, you've got to level up your skills, right? You need to master your special moves and really understand the code you'll be sworn to uphold. So the real question is, are you ready? Let's do this. The training starts now. Every great hero's journey begins with a single step. And for you, that first mission is to absolutely master the code of ethics. This is the bedrock, the foundation your entire career is going to be built on. So let's get into it. Okay, level 1. Your first trial is all about defense. Think of yourself as a guardian protecting your client's most sensitive information. This is where you learn to wield the privacy shield. And trust me, it's a powerful tool. So what is this treasure you're protecting? It's something called non-public personal information. We just call it NPI. We're talking the serious stuff. Social security numbers, bank account info, credit histories, all of it. And the law that gives you this shield? That's the Gramm-Leach-Bliley Act, or GLBA for short. This is your number one weapon against the bad guys trying to get that data. And you know what? The battle lines are actually pretty clear. A villain's move is often just plain carelessness, like sending tax returns over regular unencrypted email, or leaving a file with someone's social security number just sitting on your desk. The hero's counter? It's always about being secure, using a secure portal, encrypting data, and locking up physical files. That's not just a good habit. It's the law under the GLBA safeguards rule. Okay, so your defenses are up, you've got your shield, now it's time to go on the offensive. In this level, we're going to learn how to spot and defeat the real villains of the mortgage world, the forbidden acts. These are the traps you have to avoid at all costs. First up, we've got the redlining menace. This is a classic old-school villain tactic. It's when a lender literally draws an imaginary red line around a neighborhood, usually based on the race or ethnicity of the people living there, and just says, nope, we don't lend there. It's a huge violation of both the Fair Housing Act and the Equal Credit Opportunity Act. And this is exactly what it might sound like in the real world. A statement like that has nothing to do with the person applying for the loan. It's pure discrimination based on a zip code, and it is totally illegal. Your job is to judge the applicant, never their address. Next, you gotta watch out for the kickback trap. This one is governed by RESPA Section 8. It's all about giving or getting a thing of value just for referral. And thing of value can be almost anything, cash, fancy dinners, free rent, sports tickets. If you didn't earn the fee for a service you performed, it's illegal. This is where it gets a little tricky, so pay attention. You have to know the difference between a bribe and a legit business expense. Look, if a title company buys you a $2,000 steak dinner just for future referrals, yeah, that's a bribe. But paying a marketing company a fair price for an ad campaign they actually made for you, totally legal. See the difference? Or a realtor giving you free office space for sending them clients, that's a kickback. But paying fair market rent for that exact same space, that's just doing business. And keep an eye out for another baddie called steering. This is when an MLO pushes a borrower into a loan that's maybe more expensive or riskier simply because it pays a higher commission. A true hero always puts the borrower's best interest first, not their own wallet. All right, you've learned defense, you've learned how to spot your enemies. Now it's time to master the hero's code of conduct. Level 3 is all about your duties, your oath to make sure every single deal is fair. First rule of the code, no threats. You can never, ever try to pressure or intimidate an appraiser to hit a specific number. A line like this is a blatant attempt to influence them, and it is a massive violation. The appraiser's job is to find the objective truth of a property's value. Your job is to respect that no matter what. Your code is also powered by the ECOA shield. That's the Equal Credit Opportunity Act. It protects everyone. You can't discriminate based on race or age. And here's a big one you need to remember. You can't discriminate just because someone's income comes from public assistance like Social Security. If the income is stable, it's good to go. Oh, and you also can't ask personal stuff, like if they're planning on having kids. It's got nothing to do with the loan, and it's illegal to ask. All right, hero in training. Your senses are getting sharper. It's time to become a detective. In this level, we're going to learn how to spot the red flags, those little clues that help you unmask the bad guys who are trying to cheat the system. Let's do a quick pop quiz. You get an application from someone who's 22. They say they've been a senior manager for a decade. Wait, what? What's your move? You gotta question that, right? The math just doesn't work. I mean, a senior manager since they were 12? That's a massive flashing red flag for application fraud. Okay, next one. A borrower is buying a house 500 miles away from their job, but they swear it's gonna be their primary residence. Do you question it? Oh, you'd better. This is a classic sign of occupancy fraud, where someone's trying to get the better interest rate for a primary home loan on what's really an investment property. You've made it, the final trial of your initial training. You know how to protect data, beat villains, and spot fraud. Now, let's just master the rules of engagement. This is all about how you talk to the public and your past clients. I want you to burn this number into your brain. 18. Just 18. This one number is key to one of the most important telemarketing rules out there, and knowing it could save you from a huge fine. So what's the deal with 18? It's all about the 18-month EBR clock. EBR stands for Established Business Relationship. The moment you close a loan with a client, this imaginary clock starts ticking. For the next 18 months, you're golden. You can call that client to discuss new business, even if they're on the national do not call list. But, and this is a big but, the second that timer hits 18 months in one day, poof, it's over. That permission has expired, and you cannot call them again, period. So let's do a quick recap of your new hero toolkit. You protect that NPI with your GLBA shield. You take down villains like redlining and kickbacks. You live by a code of fairness. No coercing, no discriminating. You use your detective skills to spot fraud, and you always respect the rules, especially that 18-month clock. And just like that, you've completed your first training mission. Hey, if this helped you level up, do us a solid and hit that like and share button. And make sure you subscribe so you don't miss your next mission briefing. We'll be diving deep into part 2 on ethics. Now, for those of you who are serious about going from trainee to absolute MLO master, we've got something for you. Down below, there's a link to the Ultimate Training Toolkit on Gumroad. It is packed with advanced lessons, practice quizzes, basically all the gear you need to beat that final exam boss. Go check it out. You passed the first trial. You've shown you've got what it takes. But the real question is, are you ready for what's coming next? We'll see you on the next mission.